Today, I'm going to show you how to master trading wipeouts in strong markets. A game-changing skill every trader needs to learn. By understanding these moves, you'll stay calm under pressure, turn market chaos into opportunity, and thrive where others panic and make costly mistakes. We're looking at Bitcoin today for demonstration purposes, and what we're trying to learn is how to play aggressive wipeouts in the market for trend continuation. These events in the markets are where we have a strong trend, either to the upside or the downside, and sharply reverse, taking out key levels, wiping out a bunch of leverage in the system, and then continuing on its direction. These moves are brutal, and having a deep understanding of them before they occur will serve you extremely well, as in these situations, tensions are high, even for the most seasoned traders, and you'll need to have good control over your emotions, operating with your calm, rational mind as opposed to operating frantic and stressed. These are great examples of wealth transfers in the market where, through a process of high emotions, many participants in the market are removed and at the same time new entrants to the market appear or existing members add to their positions. How does this occur? Well, to put it simply, those less seasoned in the markets see the severe moves in price that are going against their intended position, panic and exit their positions. At the same time, those more seasoned decide to step in and buy the fear in an uptrend or sell the euphoria in a downtrend. But as a general rule, remember that the market is exactly that. It's a market. Transfers of positions and assets are occurring all the time. To help with this, imagine that there is always one single person at the other side of your trade. When you're buying, they are selling to you, and when you're selling, they are buying from you. So if you ever feel like you may be acting emotionally, simply ask yourself, are you on the right side of the trade? Now that we've got some of the psychology and theory covered, let's dive into the charts. To kick things off, let's take a look at the 15-minute time frame across the end of February and start of March 2024 on Bitcoin. If you're watching this much further in the future, don't worry. These concepts stand the test of time and will be just as valuable for you then as they are now. But before we continue, if you want to learn how to trade like a pro, like, subscribe, and hit notifications for future content so you can level up your game even further. We can see from this point here, we have an ascent in price where price marches upwards and upwards. Within this price action, we can see that there aren't really any challenges to any of the lows. What I mean by this is that you could have pretty much entered anywhere during this climb, had your stop at the local low to your entry, and gotten away with it. This is typically how extremely trending markets operate. They don't give many traders that are looking for the sweep their entry, and instead just keep grinding either up or down, dependent on the direction of the trend. If you don't know what a sweep is, it is a takeout of a level before reversing. But if this concept isn't particularly familiar to you, don't worry. I'll link a video at the end you can watch when done to brush up on your knowledge of these patterns. Price continues to grind up until this high where we start to see some signs of a wipeout. But this low at 58.5 still manages to get away without being taken out, and you really have to come down to the lower time frames to see what levels got taken. All in all, not too bad. At this period, price starts to range for some time before breaking out of this diagonal and going for yet again more upside. This was a significant range for nearly 5 days, and we now have a key low that formed, nicely sat within this period of price that is left again unswept. Price comes up, takes out this level here, and straight from this point we start to see our wipeout. At this point we have a large amount of unswept lows, as we can see here, 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 and so on. At the end of these we have the main low we marked earlier, a clear target, and a point at which there are likely a significant amount of stop losses from those that have gotten long in and around this region of price. Price aggressively starts attacking the downside, and as it does so, starts taking out level after level. This is when we need to start honing in on our emotions and make sure we're on top of things with a game plan that we formed with our calm, rational mind. The key here is not jumping the gun. We've observed price patiently for some time and need to continue doing so. In times like these, I like to use a tool I call the lioness analogy. We're looking to make our move, but it will only be successful if we wait patiently until the right time to strike. We have our target, and our theory is that everything will get wiped out to the low we're looking at. We have to be patient and wait for the right time to execute. Now, when looking for sweeps or swing failure patterns, as they're commonly termed, what we need to see is either fast speed as we take out the level, a divergence into the level to support the trade, or both. We do not need both, but we do need one or the other. This is very important when trading these patterns. It will help you sift out a lot of substandard trade opportunities and help you focus on top tier setups. In this case, we have speed, and as price continues, it starts taking out more and more of the levels in question. We're patient, we wait, and only execute when the time is right. Finally, price accelerates into an incredibly sharp and aggressive move to the downside, wiping out our target level. Now that we're in the execution zone, so to speak, it's about time we looked at the delta. We have exactly what we want to see. Large clusters of high volume negative delta and liquidations to bolster and support the entry rationale. So to recap, what we've seen so far in this trade is an aggressive and fast move to the downside, correcting 15% in just 5 hours. The taking out of our target level, high negative delta as we do so, and high liquidations as added confluence. So we have all that we need to enter the position. We know we need either speed or divergences when sweeping a level. We certainly have speed in this case and in large measure. We know we want to see high negative delta as we take out the level, which we again have in good measure, and we've got a nice cluster of liquidations as additional confluence. Now we have to think about execution, and this comes down to waiting yet again for the right candle close to occur to signal to us that a sweep is likely in play, as opposed to the wipeout going even further. In this case, the 15-minute and hourly both closed at the same time here, so we could have taken any of these for our entry. Now that we're in position, we have to think about stop loss placement, and a reasonable place to do so in this scenario would be at the low of the wick. Sometimes price can go again to take out traders such as yourself who have placed their stop here, but it's appropriate in this case considering we've already had such a sharp move, and this is already a significant stopping distance at nearly 4%. Stop placement is of course subjective. This is simply what I do and is up to your own risk appetite and approach to the markets. Now that we're finally in position, it's time to walk away and let the trade breathe. Keep a distant eye on the charts and the delta, but realize that we are in an aggressive trend to the upside and we've caught the train in the right direction. As a result, we should be looking to hold this trade as long as possible until we're given ample warning signs to exit. In this case, we get our first signs of potential warning here as we take out the high and produce some significant bars of delta on the flip side, being positive delta. So we can start scaling out of position at this point and take some profits off the table. Further down the line and we get more reason to exit as we put in a very significant positive delta candle, as we can see here, and alongside it a bearish hourly divergence. It would be wise to assume that by this red confirmation candle here, we are fully out of position, bringing our final risk to reward ratio on this trade to around 4, meaning if we risked, say, $1,000 on the trade, we would have made $4,000. Here's what the trade looked like in motion. I hope this video was of use to you. Happy trading and see you next time.